And we are live. Welcome to Crypto Law TV. I'm John Deaton, the founder and your host. I'm not going to waste any time. I want to bring on a special guest. He does not need an introduction into the world of crypto. Most of you viewers out there know him, follow him, pay close attention to him, but I'm going to introduce him anyways. We're talking to Raoul Pal, the CEO and co-founder of Real Vision, which I agree provides unparalleled access with very best insights and analysis to financial minds. He prides himself on being a business psychoeconomist, investment strategist, and economic historian. His long, impressive career involves head of European hedge fund sales, equities, and equity derivatives at Goldman Sachs in Europe, portfolio manager of GLG Global Macro Fund, and founder and CEO of the Global Macro Investor. Raoul Pal, welcome.
It's great to be here, John. Been looking forward to this.
Oh, I've absolutely been looking forward to it. I told you off camera that so the audience knows this is the first time you and I have ever had a conversation. I reached out to you. You were gracious enough to come on. I know that you are very popular in demand. And so I'm really looking forward to it. I want to start off with what you've established with Real Vision. I've been interviewed by Ash and others. I dig it. And I think I have an idea of why you did it and what your vision is, but I want you to say it in your own words. If you could explain to everyone, what is Real Vision and why'd you do it?
It's actually very important because, listen, I've been at the epicenter of the financial industry, Goldman Sachs, the GLG partners, people won't realize, but that was the largest hedge fund firm in Europe. I kind of knew everything from the inside. I opted out of the rat race and semi-retired, moved to Spain, started my research service, Global Macro Investor, which looked like the world's biggest hedge funds, family offices, that kind of stuff, subscribed to. And I kind of forecast the financial crisis. And then we had the European debt crisis as well, where Europe almost blew up. Yep. And at that point, I had to buy a generator and tin food because I thought we were going to lose the banks over the weekend until the ECB forced a bailout on the Spanish. Friends of my parents and friends of friends lost their entire life savings in the banking system. People lost their investments, my dad's retirement account, all of that stuff. And people come to me and say, why didn't we know what was going on? And I'm like, well, I knew, obviously. But I didn't have a platform at the time to help people. Twitter didn't exist. There was no way of communicating at scale with people. So that sat really badly with me for a year, and I thought I need to do something about it. And that's when I decided, okay, what could I do is kind of completely invert the pyramid and give everybody access to the world's smartest people, the best analysts, strategists, the hedge fund managers themselves, and let's share that information in long form. Because before Real Vision existed, long form podcast didn't exist in finance. We invented the whole thing.
Wow. And
everybody's kind of copied from then. And that spread by word of mouth. People are like, oh my God, it's like it opened everybody's eyes. So our mission has really been to, up until recently, was to democratize the very best financial intelligence. And it's recently changed because a lot of people are doing that now, which is fantastic. So what we're really doing is we built out this new Real Vision platform is to give people the knowledge, tools, and network for them to succeed. So we arm people with the knowledge, tools, and network for them to succeed in their financial lives. Because as you and I know, the reason we've got to know each other just over Twitter is we're in the same network.
Yep.
Right? We think about the same things. We talk to similar people. We're trying to figure out the world together. So having a network is actually a superpower. But not everybody has the network and reach that you and I have from social media. But Real Vision has created that for people, tens of thousands of people all across the world, 121 countries. And the knowledge is obviously the content itself, the education side, and then the tools are AI, and a whole bunch of other stuff, pricing, charting, all the stuff. So we try to create a place where people can take their entire financial journey and start at information, which is where we all start, move that to knowledge, and end up somewhere near wisdom. And if we can do that, we can help a lot of people. As part of that journey was my crypto journey as well. So at the same time that the European banks blew up, I started going around the world trying to start the world's safest bank with a bunch of family offices, some famous guys and famous hedge fund people as well. And we went all around the world trying to set something up. And what we wanted to do was just hold US treasuries directly with the Fed, i.e. no fractional reserve banking.
Right.
Eventually, the Dallas Fed stopped us and said, "This is a great idea, but we're not going to let you do it." And nobody will. I said,
Of
"Why?"
course.
They said, "You'll take all the deposits from the banking system because
Right.
everything else is fractional reserve banking." And at that point, I was kind of writing Global Macro Investor about the frustrations of this. And a client of mine just said, "Hey, listen, you need to take a look at Bitcoin." I'd heard about it. So this
Right.
is 2012. And I wrote the first ever macro strategy piece on how to value Bitcoin in early 2013. And I started investing then, seeing that this was the future of the financial system in a world where there's far too much debt and nobody knows who owns what. And even your bank account is not your money.
Right.
I thought we need something else. And blockchain was the answer.
Well, and the government's still doing it. Look what I don't know how familiar you are with Custodial Bank and Caitlin Long and how the Fed denied a master account.
Same
You know,
reason. Same reason.
and she had that same revolutionary idea as you, Raul, which is to have one-on-one, like 108% reserves, right? Imagine that. There could never be a bank run because you've
No.
got it, right? And so, but the government is engaging in some of the things we're going to talk about. So, listen, you obviously moving from traditional finance, as big as we're into that, to this crypto world. What similarities and differences do you see, if any?
So the similarities are, and it took me a while to actually figure this all out, but my work at Global Macro Investor showed that it's driven by the same things, the same business cycle, the same liquidity cycle, all of the same things that drive all other asset prices drive crypto. So I could use a framework that I understood to do this. Yes, there's a lot of other stuff you need to learn with crypto. It's an endless rabbit hole, as you know. But what I really discovered, and I've been in the space for a long time, but it was really from about 2017 onwards, you realized how many smart people were in the space and the diversity of people, from music artists to financiers to technologists to lawyers to accountants to all sorts of entrepreneurs. And it was moving at this lightning pace. And I think you've had the same breakthrough. It's like, this is fantastic because I feel like I'm part of something that has a mission. The whole space has a mission. We're doing something good because we're building a new system and we're also making money in the process. And we're attracting an incredible community of the world's smartest, most engaged people. It's like, what's not to love?
No, I agree. Listen, I wrote a book where I talked about crypto helped get me out of the bed. I'd reached success. I had, enough money that was, you always want more, right? But I had enough money to live a comfortable life. I was satisfied. I was happy. All the things that I thought were going to make me satisfied. And it kind of got bored. And all of a sudden I go down the Bitcoin rabbit hole, sort of in a midlife crisis. And it really is brought a second life to me, and enthusiasm. And are you experiencing that same kind of?
Yeah. The amount of energy I've got now and passion about stuff is exponentially larger than I've had for decades. I feel the same kind of way that I felt when I was sitting on the desk at Goldman in this most amazing position in the world, speaking to the world's most famous hedge fund managers during the Asian crisis when it's all happening. I'm like, what a time to be alive.
Right.
This is like that. It's like you're living on adrenaline. You're excited. It's fun. And it's just very rewarding.
Let me ask you, based on the stats I've seen, my question really is going to be, where are we when you think about mass adoption, Raul? Where are we on that curve? I think the stats are less than 2% of the people in the world own Bitcoin. If you count American adults, about 22, 24% own Bitcoin, which is, between 1 and 4 out of every 5. But how far are we from real mass adoption?
There's two ways of looking at this. One is crypto.com have their own kind of very detailed analysis of the number of active wallets. They've got 516 million. Kind of adds up. If you look at Coinbase users, there's 110 million Coinbase accounts. Not all of them are active, obviously. Right now, there's about 10 million active. Binance at about 150 million. Then there's a whole bunch in India. There's a whole bunch of stuff. So it's about 500 million people, wallets, however we want to look at it, right? So that's a reasonable amount. And it's been growing at 100% a year. Even in 2022, which was a bear market, the number of active wallets grew 42%.
Wow, I didn't know that.
So it's growing incredibly fast. I've said for a long time, it was the fastest adoption of any technology the world's ever seen, faster than the internet, faster than the mobile phone, faster than the television. But obviously AI just overtook that. It got to 0 to 100 million in 5 weeks. But still, the pace of adoption is ridiculously big. So even if we extrapolate out the trend, in a year's time, we're at 1 billion. Maybe the trend slows. Maybe it's 750 million by the end of 2024.
Right.
And then, you very soon get to very large numbers, 2, 3, 4 billion people, which is kind of when you get a more saturated market. So we are still early, but we're not super early. And I would suggest that the cycle that lies ahead that we've started is probably the cycle that I refer to as the everything, everywhere, all at once cycle, where we do see adoption from every angle.
Yeah, Brad Garlinghouse, CEO of Ripple, famously said about 2-3 years ago that 99% of the tokens out there were going to zero. I think there was 20,000. And if that's true, that would leave a couple hundred if you go with the 1% of 20,000. Let me ask you, do you agree with that sentiment that 99% out there are?
So, yeah, how to think about this is, for eternity, retail investors have been shut out of venture capital, which has generated huge returns. This is basically tokenized venture capital. And so the VC game is about 80% of everything goes to zero. 18% does okay, and 1% knocks it out of the park. It's exactly the same. New businesses die when they don't get traction, and that's okay. It's this perfect pure capitalist cycle that goes on in crypto. Yeah, there's a bunch of scams and there's a bunch of bad behavior, but there is in all businesses, and it's not just in crypto.
Yeah, I want to actually play a clip when you were on with Scott Melker. And then a clip from me on Charles Payne. I think we talked about something very similar. Let's play the Scott Melker clip first, please.
You have been given one gift, is you can buy a fractionalized asset that you can be a billionaire, or you can make $200 a week and you can put 10% of your money in it because it's fractionalized. And also, I've talked a lot about this before, this is the first time the little guy gets a chance to front run the institution. Amazing. And it's not easy, right? Plenty got wrecked on the route. Everybody told them just to hold, don't use leverage, and people don't listen. They lose their fucking minds in the middle of these things. But if they could just hold, maybe dollar cost average, don't use leverage, and put it on your ledger device, your probability of success is extremely high. And then you get to front run what is now the dumb money, which is the institutions.
So much, but I want to play you where I'm going to say, because I have you on here, I'm going to say great minds think alike. Let's play me on Charles Payne.
And what I think what's happening is that cryptocurrencies and Bitcoin is one of the few times in history where the individual kind of front run the industry, if you will, and the hedge funds. And personally, I think that Gensler's attack on crypto is to allow the hedge funds and the Wall Streeters to come in, crash the market. They come in and then
by the way,
promote it.
they
It's
did
the
that with the
greatest
stock
thing.
market.
So anyways, obviously, which is going to segue to our next topic, which is the United States and regulation. Do you believe there's any truth to what I was saying where, and Elizabeth Warren just presented a bill yesterday, Raoul, where it's effectively asking unhosted wallets, software code to AML and KYC, things that validator nodes that can't comply, which would be an effective ban. But do you think, since we're going to talk about the United States, that the incumbents have seen you can't kill it, so let's crush it? So maybe the Larry Finks and the Black Rocks, they come in and they get a bigger piece, or do you think I'm just got the tinfoil hat on there?
I think there's multiple attack vectors going on here. One is government, because government has a monopoly on money and violence, and when you are the world's reserve currency, you're very nervous of making a wrong move, right? We've seen this repeated. I've written about this on Twitter. After the US left the gold standard, they tried to stop capital flight, had capital controls. So the UK started the FX market, which is the largest market the world has ever seen, because South Africa wants to trade with the UK and dollars come in the middle, and we're like, well, we need an FX market to trade because we're not using gold anymore. Then it happened with the Eurodollar market because the US banks were not allowed to lend internationally. So the UK started the Eurodollar market, became the largest market the world has ever seen. Happened again with derivatives. They wanted to protect the CME and the CBOT. So they're like, we're not going to let the banks have regulatory cap availability for OTC derivatives. So London started the OTC derivative market. The swap market was first, became a $1.4 quadrillion market. So we've got a history of the United States being cautious around these things and eventually catching up. So that's what I think Liz Warren there's some nervousness around that. There then is just votes, right? The world is pretty polarized right now.
Yep.
And one of the ways this polarizes people is young people vote for crypto. So they're much higher, 30% of millennials will own crypto. Of the baby boomers, much less. Liz Warren is a poster child for the baby boomers.
Right.
So she's trying to get votes, which is the we fear change crowd, which is the older people who like, I know what I know and I like what I like.
Right.
So I think it's political, and it's also out of fear over control over money. And the US has control over money, and it can sense that something's changing, even though stable coins have actually made it more dollarized.
Right.
The banks, from as far as I'm aware, forget what Jamie Dimon says, because he's got a monopoly basically of banking, but all of the banks know that blockchain technology is the solution, every one of them, and they're all working on it. So they're not really fighting us at all. They're just shit scared of Liz Warren and Gensler. Right. That's the real problem here, is they can't move forwards. Do you think Goldman wants an OTC trading desk for crypto? Of course it does, but it's still worried. Still worried about what it can do. The asset management firms haven't been able to create products because they don't know who's going to get sued. And so that's the issue here, is for some reason, Liz Warren has been given control over the financial system by Biden, and Gensler is her puppet.
Yeah. We learned what you just said. We learned the SEC. One thing that I've learned from suing them and being involved in the Ripple case is they actually prefer it to be vague. They prefer the markets to be vague because it allows them, maximum enforcement actions. And we learned from the Hinman emails that were discovered in the Ripple case that they actually said, for example, in the Hinman speech, they said, well, maybe you shouldn't give that kind of clarity to Ethereum because it'll limit what we can do in the future. And, I thought that was just remarkably dumb, because you would want to,
But they don't want to set a precedent, because maybe it's fine to set a precedent for Ethereum, but then that sets a precedent for 50 other things.
Right.
And then they've lost control. So the best thing is, unless you've got the balls of Brad and others, unless you can get it to court and get it agreed, it's very difficult for people, and that's how they like it. The maximum uncertainty makes it just impossible for anybody to do it. So it just slows down the progress. I think actually what they're trying to do is slow it down.
Yeah.
Because if they accepted it too fast, it's like kindling, right? As we know. And we saw the same in China and India and the EU, is they're like, okay, first we need to understand what the hell this is. Second, and this is a thing that most people won't like, second, we need to figure out our central bank digital currency, so then we can know where the capital is going. Because if central bank digital currency is on blockchain rails, then you can see the connection as it goes onto the distributed ledger systems.
Right.
China did that. They closed, converted to a CBDC essentially, and they will reopen for capital flight. They're reopen via Hong Kong, because now they're in control of the money. They can see where it goes.
Right.
Blockchain's a gift for them, because they can see the dollar that John spends. They can see exactly where it goes around the system. Yep. Now, they may not use it against you. It may be amazing data that we can analyze economies with. There's many things, good things that can happen. There's many bad things as well, but they're coming. But interesting enough, the US is dragging their heels on this as well. While the UK is moving there as fast as possible, the EU is doing a decent job. Switzerland, Hong Kong, Singapore. India's still slow because it's not rolled out its digital currency yet. And it's got closed capital accounts, so it doesn't want money to leave too fast. So they need to figure that bit out. But interesting enough, when I spoke to Swapnendu Mohanty, who is the chief fintech officer for Singapore, the monetary authority for Singapore, he spends all his life with the BIS and the blockchain initiatives and the CBDCs. He's like, yeah, we're all sharing notes and working together and figuring out how to do this. He said, there's one black hole, the US. They won't even talk to us. They won't even talk to the BIS. They won't talk to the UK, Switzerland, anybody about CBDCs because they don't want it because they're scared.
Well, it's interesting. I think you've hit on a lot of important points because Elizabeth Warren, at the same time she's proposing, this effective ban, she came out in support of a central bank digital currency and said on Meet the Press on Sunday, I think it's time. And so I think your point about slowing it up until they can get control.
So then once you think of that narrative that I've laid out, then you understand why the Bitcoin ETF is something they want. Why? Because it's now in the hands of Wall Street and away from the decentralized world. So you're basically got control over the capital flight. And they know that that's going to mop up huge amounts of demand and stop people going to the distributed version of it.
Right. No, that's excellent.
And it makes sense. I get why they're doing it. And actually, for retail, in an ordinary course of events, it'll work fine. But they're not really in the crypto system. They're basically tourists because they don't have their own ownership over their assets, which is the problem that crypto was built for in the first place.
Right. Listen, I want to, I've addressed the issue in investing, but, I don't have the kind of cred that you do. And I know a lot of my viewers, I'm sure you've heard about ETHgate on social media and the fact that, ETH was given a regulatory free pass. And although I've been on the lead of highlighting the conflicts of interest of Bill Hinman or Jay Clayton, whatever, people were shocked that I own ETH. And I owned, a lot more ETH than I did at XRP. And I owned 10 times more in Bitcoin than I did XRP when I filed the case in the Ripple case. Because to me, it was about government overreach, not a specific token. And a lot of people ask me, with knowing what I know and fighting for what I fought, how could I own Ethereum? And I say my response to them is I take emotion out of it. Like and I separate the token from maybe a CEO, or I separate ETH from Vitalik. And I say to people, listen, as much as I'm in this rabbit hole and passionate, I love my daughters and my family and my friends. I don't love Bitcoin at XRP or ETH. To me, it's an investment. And so what's your view on that?
My view on that is, and it's the reason I've always been supportive of Ripple and the XRP ecosystem and everybody else. This space started in the Wild West. There was no fucking regulation. Nobody has a clue what to do. And to go back into that past and say, well, you didn't do it right. I mean, these people were pioneers. And I don't give a shit what mistakes people made, but these things are real. They're real blockchains of real communities and real use cases. And that's what matters to me. I'm sick of the tribalism. I understand that people want to be somewhat tribal around an asset that they like, and that's okay. But what we should be rooting for is everybody to succeed.
Right.
And, and it's not, and it's not about them versus us. It's about, we need a system like this. And the best way of getting there is working together.
Yeah. When I first filed the case on behalf of XRP holders, I had a bunch of Bitcoin maxis to say, oh, you're helping Brad Garlinghouse or you're helping Ripple. And I was saying, listen, it's about applying these, 1920s laws to modern day blockchain technology. It's about the SEC doing a jurisdictional land grab over the whole ecosystem. And it's a slippery slope. But, that tribalism that you brought up, how do you deal with it? Because I know Bitcoin maxis, they've targeted me, they've targeted you. Do you just don't give a shit or?
At first I did. you know, it really happened to me. At first, they kind of saw me as a spokesperson for Bitcoin, but then I switched my asset allocation towards ETH, and they were so angry. And they still remain that way. And I've just learned to ignore it now. If they're really just rude, pathetic, I'll just block them. If not, I just let it pass. I mean, I've got a million Twitter followers. It's too much to get. It's too easy to get overwhelmed by the negativity of people doing stuff like this.
Yeah.
So I just try and show the way, to show that the best way to behave is treat people like you'd like to be treated. Have respect for these communities. Have respect for people who are hustling. Have respect for what the point of this space is. And that means you can have respect for the Max's point of view. I get it. But just do it in the right way.
I guess the only thing I just intellectually, I have a hard time with the concept that there's only going to be one network, that there's only going to be one blockchain. That to me, it just doesn't sound, it's almost anti-American. We want competition, we want free markets, and let the best tech win, you know, and if that's Bitcoin and Bitcoin becomes all and everything, and then great. And if it's not, fine. If it's, you know, the store of value in the digital code is its narrative forever, then fine. And so I just had a hard time staying intellectually following.
Well, also, the weird thing is somehow that community's got itself tied up in knots where, you know, Bitcoin has a very clear narrative. It's a super secure chain. It's battle tested.
Absolutely.
Everyone knows what it is. That's all you need. But what they've then said is, well, nothing else should have value, which is this kind of intellectual weird place to end up. Right. Because these other things are networks of which people are building entire businesses, use cases, DeFi system, NFTs, all of this stuff, stable coins. That's not happening on Bitcoin. These are different types of use cases for a blockchain. And I just don't see how that kind of weird intellectual knot they get themselves tied up in to say, well, everything else is a scam and it's all worth zero. That's just stupid. No, and, you know, it's interesting enough. You know, I'm not a big holder of XRP, but I've always had some. But how much shit that they took because they were around in the early days.
Right.
And, you know, it really was a battle of survival of the chains. And I get it, that one gang versus the other. But, you know, it's kind of ridiculous.
Well, it's funny because, you know, the main thesis in the beginning was, oh, XRP is the banker's coin. But now Bitcoin maxis celebrate Larry Fink in traditional.
I know, it's ridiculous.
Banks coming in and
it's centralized ownership of Bitcoin, not decentralized ownership of Bitcoin. But because number go up, it's fine.
Well, that's really what it comes down to. But at the same time, our next topic is the Bitcoin halving and a bull market. And I want to play a clip because a lot of XRP holders were surprised by this. I want to play a 38-second or quick clip of me predicting the Ripple case on Liz Clayman.
No. I think the SEC is going to lose, but that doesn't mean Ripple's going to get an outright win either. But I think the SEC is going to lose at summary judgment because of the theory that they went with. Charlie, normally when you go after a promoter, you say, well, on this particular day, you made an unregistered securities offering or sell. And that particular transaction was a security, an investment contract. And now they're saying that all sales of XRP, the token itself is a security.
I think
and that's the problem.
See,
John, this is why all eyes are on this case.
By the way,
and why Twitter blows up every time you come on the show. Just to point out, guys.
I think the SEC is going to win. And I'll tell you, it's going to be a bad day for crypto if they win.
Okay,
right.
We're going to put that dinner on that?
Steak. All right. So the point was when we got clarity in the secondary market from the judge's decision, and she said XRP is not a security. Before that, I had already told people, I certainly think XRP would pierce $1, but I never believed it would reach another all-time high unless we're in the Bitcoin-led bull market. And I think that played out. I think XRP, after the decision, you know, got close to $1 and then it faded back. And so my question to you is will tokens like XRP or ETH, will they ever decouple from this sort of Bitcoin cycle that we've witnessed?
No, because the Bitcoin cycle is the macro cycle. Don't forget, all assets are going up and down in this 4-year cycle, as is the economy, as are interest rates. It's all due to 2008 and resetting interest rates back to zero, all the major governments around the world. They then issued their debt in this 3 to 5 year sector. So let's call it 4 years on average. And this debt refinancing cycle is the cycle that drives Bitcoin, all crypto, all assets. It's also the presidential cycle. They're all the same thing right now, right? This is this super correlated world.
Yeah.
So within it, the first part, what I call macro spring, which is what we've been in, the early part of a bull market, when inflation is starting to fall, growth is still falling, but starting to try and stabilize somewhere. Normally, that's when Bitcoin outperforms. It's like in the beginning of a bond market rally, it's treasuries that outperform. Then as people get confidence and more liquidity comes in the system, they start taking more risk and it goes further out the risk curve. And that's when the alts start performing. So we're transitioning currently from macro crypto spring to macro crypto summer. So that's what's known as alt season. And it starts with the higher quality tokens first. And then at the end of it, in 2025, it's kind of everything goes up ridiculously.
Okay. I want to play one more clip. This is with a view on Laura Shin's show. It's about a minute, but I want to follow up on some of the things you talked about. Go ahead.
I've got 3 outcomes in my head that I'm juggling with. The 60% probability is we have kind of a very traditional cycle, and that pushes, Bitcoin up to the 100,000 to 200,000 range, and, all the other assets accordingly where they are on the risk curve. There's a 20% chance this early start is signifying something much bigger, which is the larger adoption and the more capital into the space, which leads to larger price rises than people expect, because people are quite scarred because the last cycle seemed shorter than most people expected. Everyone thought there was another final leg higher, and that never really happened. The kind of 100,000 Bitcoin, the laser eyes idea never got there. But maybe this time the shock is for excess returns beyond expectations. The other side that I grapple with as well is, well, maybe the whole cycle's front loaded, and in fact it's shorter, but more violent in 2024. So those are the 3 scenarios that I'm juggling in my head with, but 60% probability is just does what it says on the tin and repeats what it usually does.
If you enjoyed this clip.
Okay. If you enjoyed that clip, go to Laura's podcast. It's called Unchained. I didn't mean to cut it off. It looks like a perfect storm to a layperson, Raoul. We've got the spot ETF approvals coming down, BlackRock and Fidelity sales teams out there rushing to earn fees, the Bitcoin halving in April. We're going into election year. You brought up the presidential election. I believe, and I want to know what your thoughts are, I believe that an administration that's the incumbent administration, where we've witnessed interest rates, be increased in a very, some people's opinion, violent manner upward, that we're going to see lower rates, especially before the summer, before the election, in an election year. And when you and more liquidity coming into the market, and when you add all those things up, you get your 60%. Is that where you were headed, or am I misstating it?
Yeah. So the regular macro cycle is exactly as you're saying. Governments want to bribe voters, so they give out as many candies as possible, and that's stimulus. The central bank is involved in this because it has to help refinance the government finance debt. So they do want to get interest rates lower. They're talking a harder game now because I think they want inflation to undershoot, because then that gives them the cover to use the balance sheet, to print money, do all of the things that they do. And that's fine. And that would be a normal crypto cycle. We've seen that pretty much every time we get into the halving year.
Right.
But we are seeing some bigger dynamics here, which is we could see a huge amount of capital coming in because of the ETF. And because of a lot of people are building on real world assets. We're seeing money transmission mechanism stuff being done. We're seeing, new use cases of NFTs. They were new for the last cycle. What are we going to use them for? When Solana can mint 1 million NFTs for $100, Well, you can use it for ticketing. You can do all sorts of things we can't yet imagine. And we've got the CBDCs are going to be rolled out in some places within this cycle, which is, again, using the underlying chain and the ongoing growth of stable coins. And we're seeing brands come into the space to use kind of Web3 as a way forward for new business models, which is why I call it the everything everywhere all at once, which means that we could have collective madness where kind of more like the 2017 cycle,
right?
It just goes crazy. Now, even I expected the same kind of finish of the 2021 cycle. I got that spectacularly wrong. But maybe we get it this time around.
Well, I mean, I guess the question that I have is, we went from a zero interest rate environment with massive liquidity to the opposite. And that I think that had a lot to do with you being wrong, me being wrong. I was out there saying that Bitcoin was going to hit 100,000, was convinced of it. Why? I can always Monday morning quarterback today. But to me, I believe that environment that Bitcoin had never experienced, it had a big impact. Do you think there's that strong a correlation or no?
Its bear market was the same as all the other bear markets. So even though we went through this extraordinary macro situation with this ridiculous inflation and huge, as you said, violent rate rises, Bitcoin went down 76%. It's kind of does that every time, And so I think just what happens is as liquidity comes out of the system, liquidity comes out of cryptocurrencies, as it does out of emerging markets, as it does out of commodities, as it does out of all of these things. When liquidity comes back, it comes back. But each drawdown from every bear market in Bitcoin is less than the last. It's like ETH first time around was 97.5% down.
Wow.
Second time, 80%. Third time, probably 70%. Solana, first cycle down 98.5%. Next cycle, if it does well and thrives,
right,
it will be 80%.
Right.
And Bitcoin will be less the next time around.
I guess my biggest concern, again, coming from a non-technical perspective, just as a layperson, is when everyone seems bullish. I mean, you're seeing, like Bloomberg's of the world saying possibly 400,000 level Bitcoin, and you start averaging out, and people seem to predominantly be saying Bitcoin could hit 200,000 this cycle. And everyone seems bullish because of the spot ETF. There's a part of me that gets concerned that, it's going to do something.
Just remember, John, we're a small echo chamber on crypto Twitter. There's only a small bunch of us, really.
Yeah.
There's maybe active, really active, 500,000 people. So there's 500,000 people cheering, shouting, screaming at each other, all of this, right? But when you look at the actual capital flows into crypto, it's been small. They've only just started recovering. So just because we're blessed with the ability to be ahead of everybody doesn't mean it's overcrowded, but it needs that money. We need to be front running the institutions, as we've always said.
Right.
And then it's all fine. If the institutions don't come, we're all fucked because it's going to go back down again.
Right. Well, this is a perfect segue for me to play another clip of yours where you tell us in very eloquent ways not to mess up. If we could play that.
I can understand the arguments, but I have a big expression in all of this, which is don't fuck it up. And usually people fuck it up by trading. Right? If an asset's going up, and these are fast-moving assets, you don't need to do anything. You just need to own them and do nothing else. But everybody it gets even greedier. So then they start thinking, well, Solana up 500% is not enough. I need to use leverage on Solana. And then that's not enough. And I need to now trade it, flip in and out from one thing and the other. That's the way to not make money.
It's a viral clip that's already went viral. I could not resist playing it. And I'm going to ask you to help me not fuck it up, okay, this cycle. But let's talk the last few minutes we got. I do want to talk to you about specific tokens or ecosystems. Listen, in 2020, I remember the head of Sigam Bank out of Singapore encouraged people, said, Bitcoin, you should have because it's the world's greatest store of value. It's digital gold. You should own ETH because it's the best infrastructure play, and you should own XRP because of the payments. Now, of course, after that, XRP got sued, and I think that had some impact on the growth of the ecosystem and whatnot. But do you agree as we fast forward 3 years later? Because 3 years is a huge amount of time in this space. Do you think Bitcoin will be anything other than that digital gold store of value, amazing, secure network?
The only thing that's changed really, look, the Lightning Network hasn't really taken off. So as a payments rail, and we've got very efficient other payments rails, faster, cheaper chains that have been less centralized than the Lightning Network. I think ordinals are interesting because by actually putting the asset on chain, you're creating maybe a super safe storage because you're using the Bitcoin blockchain. Yes, it's inefficient. Yes, it's expensive, but my God, it's safe. Yeah, it's secure. So, okay, that's a really interesting thing, and people are just experimenting with it. So I don't know if it changes a lot, Bitcoin, but the other ecosystems, well, they can adapt and change because just by nature of what they are and how the chains work.
Right. Now, obviously, when Hinman came out in 2018 and gave ETH some regulatory clarity, at least public perception-wise, even Joe Lubin had went out and said, look, we're the only game in town because we have the regulatory clarity. You can't build smart contracts on Bitcoin. And ETH had first runner advantages. I think that's not a very controversial statement. But do you think ETH is still the best infrastructure?
It doesn't matter. Is Android the best phone? Excellent. It's once you've got network scale, it becomes a career decision to build on something else. Right. So, ETH has got all the component parts. It's battle tested. It's got incredible density of talent, intellectual capital, and it has an enormous network of applications and use cases. So it's actually a decision. If you're a big brand and you're coming into the space and you want to do something, you have to argue why not use ETH.
Right.
So that's the issue. That doesn't, like you believe, that doesn't mean there will just be one.
Right.
There will be a whole number of chains for different types of applications, and some will compete against each other. But overall, again, the key point is we are building this distributed world and a whole parallel financial system, and we should be encouraging everybody to have success.
Oh, I agree with you 100%. A lot of questions were sent to me to ask you. One of the popular ones was, do you think the ETH flippening of Bitcoin ever happens? Do you think it's possible or unlikely?
I still do, actually. And it might be the peak of this cycle that ETH just gets larger than Bitcoin, and then that will be the peak of the cycle.
Right.
But yes, just because of how these networks are valued, it's actually number of active users, of which ETH has a lot, and it's not the number of transactions, because ETH has a huge amount more transactions, it's the value of those total transactions. Bitcoin does higher value. But because of the number of applications being built on ETH, it doesn't take long for it to really accrue huge value. Now, some of that changed by the layer 2s, because they kind of batch and only use a small amount of ETH for the settlement layer.
Right.
But those chains are scaling fast, so they do have demand for ETH. So, yeah, look, there's a possibility, but again, I'm indifferent. I don't care. I don't have a dog in that fight.
Right.
Yes, I have investments in the game, and I can change my investments too. But it's just people get really weird around stuff like this. Even Laura Shin got weird about it. She's like, "Oh, you can't say that." I'm like, "Well, does it matter?
What's it matter?" No, listen. I agree with you. Listen, I know I'm taking a lot of time. I want to pull up let's pull up the panel's tweet about what to ask Raoul. One of the question was, have you explored the XRPL ecosystem and its apps? And then after that question, which 3 L1s are you most bullish on long term, if you don't mind?
Yeah, I tend to be quite a lazy person, so I'm more of an investor, hold the underlying tokens. I tend not to do too much because my thesis is the more you experiment, the more likely you are to lose money. That doesn't mean people shouldn't, but a lot of people are much better at understanding the risks that they're taking.
Right.
You know, when you're using a DeFi protocol or you're using this and that. Yes, I buy NFTs. Yes, I use a bit of DeFi here and there, but I'm super cautious. So I haven't really explored the XRP ecosystem. I haven't done it on most chains too much. You know, I've never used Ethereum DeFi because I don't want to. Because I don't want to put my coins outside of my wallet. It's as simple as that for a 5% yield. Right. I have done a little bit more on Solana just because the user experience is so easy versus other things. So yeah, I'm generally a bit of a moron. I just keep it really simple.
Would you say
because I don't want to fuck it up?
Excellent point. Would you call yourself more bullish on Solana than ETH, or?
Yeah, I'm much more heavily weighted to Solana for this cycle because I saw two big technological breakthroughs. One is these compressed NFTs. You can mint 1 million NFTs for $100. Okay, that's game changing. For what? We don't know. We will find out. But it's not monkey JPEGs. You know, it's going to be something different. The other thing was this fire dancer that can theoretically get to 1 million TPS. I mean, that's a whole game changer. You can put a lot more of the financial system on that.
Right.
So those two things, and then how user-friendly, consumer-facing Solana is, and the strength of the development community, and the fact that it got slaughtered, but everybody was still building, made me think, okay, this is probably the chosen one for this cycle. You know, so other things will outperform, of course, but you know, that's why I'm just immensely bullish. I also think Anatoly is just a very high-quality person, no hubris, talks to people, helps promote the space, is not a promoter, happy to have conversations across different chains with different people. That's what this space should be about. He's a really high quality person.
All right. And I have to ask you, well, first of all, you know, it was interesting. Mike Novogratz, I believe you interviewed him recently, and he admitted to being maybe wrong about XRP. And he made a comment that the XRP army is real. And as you know, a lot of my audience are XRP holders. We got 75,000 of them from around the world, 143 countries who joined in this fight against the SEC, which just to me is a phenomenal thing. It had never been done. And it was, you know, individual people wanting to have a voice. And so what are your overall thoughts on XRP, if you have any? And if you don't, that's fine.
So I was taken down the XRP rabbit hole by Santiago Velez.
Yeah,
who's a good friend and is incredibly smart guy and very thoughtful. So he's like, yeah, the narrative's wrong. This is what it's about. So I'd done a bit of the work on it. Then the court case came out, and so that's when I bought XRP. You know, when you see something like that, it's like, okay, now the price has been massively discounted.
Yeah,
we know it's a real thing. Yeah. Half the people have been shut out of the market. This is the opportunity of a lifetime. So that's when I bought it, and I've held it ever since.
Yeah, well, you know, it was I bought more after the lawsuit, and it reminded me of the time when Jamie Dimon said that Bitcoin was a fraud for the first time. I bought more Bitcoin on that particular day as well, because I said if it threatens him to the point where he's going to go that hard, there's got to be something to this. Anyway,
you know, the reason I bought XRP was exactly the same way that I bought Solana, which was like the crisis arrives. The price gets absolutely smashed, but I can see that there is a vibrant community with real use cases of the chain going on. It's not kind of ghost use, it's real use. So in which case, time to put your capital at work. Simple as that.
Yeah. You know, one of the other big questions, Raoul, was, are you optimistic? What's your overall optimism moving forward with this space? Because you clearly are one of the true leaders out there who rejects tribalism, you're chain agnostic. And I think the best answer is, I asked you this off air, but how much of your time is spent on crypto versus traditional finance today?
I mean, look, I use a traditional finance investment framework, but really 99%, well, 100% of my liquid net worth is in crypto, 100%. And it has been for 3 years. It is what I really enjoy. Yes, I'm really interested in technology and this exponential age and AI and robotics and all of that. I do invest in that space as well. But my first love is crypto. I just love the whole. I love the whole space. I love the people in it. I love the pace of it. I love what it stands for. I love the fight.
Yep,
the system changing in front of your eyes. I mean, these are amazing things. You know, what a time to be alive, to be part of this.
Absolutely. Perfect way to end, Raoul. I went a little bit over, but that's me selfishly trying to take up as much of your time as I can. Been amazing. Look forward to meeting you in person one day and sitting down and having a real life person conversation. Okay.
Absolutely, John. Can't wait. But thank you for having me on. I really appreciate it. It was good fun.
I appreciate it. Thank you. Everyone, see you next week.
Take care.